Welcome back to another video. This is lesson 8, reversal patterns. Everything that has been covered in this Forex price action basics course is all to help you analyze what price is doing and where price is likely to be in the future, because that's how we make money in financial trading, is being able to speculate correctly where future price is going to be. Because if we know that, then we can open a position accordingly, a long position or a short position. So things like support and resistance, Japanese candlesticks, price trends, price ranges, all these things help us to identify where future price is going to be. And the same is with reversal patterns and the last lesson in this course, which will be about consolidation patterns. Now, all patterns, or the majority of patterns, are based around how price trends and what happens when we come to the end of a trend or are starting a new trend. So if you think of an uptrend, which generally looks something like this, we have higher highs and higher lows. That's the main characteristic of an uptrend. What generally happens with this trend when it comes to an end is that we break this low and create a lower low. Price then ranges or it starts downtrending. And the same with a downtrend. The main characteristic of a downtrend is lower lows and lower highs. When a high is broken, we generally see price uptrend. Now, why do we need to know about price patterns? Because price patterns help us to identify when highs are broken on downtrends and when lows are broken on uptrends. If we can identify this, and a pattern helps us to do that, then we can predict what's going to happen with price. So on the screen, we've gone back a few lessons. Let's just click on here. Just bear with me. Okay, so reversal patterns. So this chart here, you'll see that price is uptrending. Let's draw this. We have a number of pushes and pullbacks. Here are our lows. We create a low here. We then break that low. So price is likely to start downtrending now, or it's going to range. But this uptrend is likely to be over. Now, the most common patterns that are used in Forex trading for reversals to know when a uptrend has come to an end or potentially come to an end, and when a downtrend has potentially come to an end, are head and shoulder patterns, inverted head and shoulder patterns, and double tops and double bottoms. And I'll go through all of these things in this video. So this is a head and shoulders pattern. And what a head and shoulders pattern is, it's when a low is broken or when price is very close to breaking that low, and we get something like this sort of pattern. This is a head and shoulders pattern, quite simply because we have a head and two shoulders. And on this chart we have an example of a head and shoulders pattern. Let me draw it on for you. So this is the first shoulder, this is the low. We then break that low and we have our second shoulder and then start downtrending. And I can actually show you this on a chart. This is US dollar, Canadian dollar. This is the head and shoulders pattern. Price is clearly uptrending. We have a shoulder, a head, and another shoulder. Now price is downtrending. So this head and shoulders pattern, if we're looking out for the head and shoulders pattern and identify this pattern, we know that price could start downtrending. So if we are long, it's a good opportunity to get off. If we want to go short, this is a good opportunity to go short. Now, an inverted head and shoulders pattern is basically the same, but for when a downtrend turns to an uptrend. So this is an inverted head and shoulders pattern. Price is downtrending. We have a shoulder, a head, a second shoulder, and then we start uptrending. So something like this. So head and shoulder patterns are for uptrends that may reverse, and inverted head and shoulder patterns are for downtrends that may reverse. And if we go back to our US dollar, Canadian dollar, there is a inverted head and shoulders pattern here. So price is downtrending. We have a number of pushes and pullbacks. Here are our highs and lows. Here's the head. And then we start uptrending. So here's the head. Here's one shoulder. Here's the other shoulder. So they're head and shoulder patterns. We may be able to find others, but let's actually move on to double tops and double bottoms, because there's plenty of material on this page about head and shoulder patterns. And as always, the best thing to do is just to look at the charts and try and identify these things yourself. So double top and double bottom patterns, unlike the head and shoulder patterns that kind of have these three peaks, or the inverted head and shoulder pattern that has three troughs, a double top just has two. So you have something like this, and it's just a failed push higher. We can't push higher, and then we move lower. And then a double bottom, same thing but for a downtrend. We can't push lower, and we start uptrending. Now if you just look at everything that's been taught in this course with a bit of common sense, then you'll understand these patterns a bit better. Why does this pattern appear when we reach the top of an uptrend? Well, the momentum has died out. We can't push any higher. This is as far as the buyers can push price. And also the selling momentum is getting stronger because we've taken out a low, and price starts downtrending with a double top. There's an example here with this nice uptrend. We fail to push higher. The buy momentum is dying out. It's becoming exhausted. The selling momentum is taken over, and we start downtrending. And here's a double bottom. Same sort of thing. It's very similar actually to an inverted head and shoulders. This could be the head and then the two shoulders, but you could also look at it as a double bottom. So one push, two push, and then we reverse. We fail to push lower. Now let's look at some of these things on charts. That was a daily chart of US dollar, Canadian dollar. Let's go to a smaller time frame. Australian dollar, Japanese yen. Let's try the 1 hour chart. Oh look, there's one right here straight away. A double bottom here. Price is clearly downtrending. Something like this with this big push down. We pull back, we go for the other push, but we're unable to push lower. We create a higher low, which is the characteristic of an uptrend, higher highs and high lows. We create a higher high, and price starts uptrending. There is a double top here. These things are happening all over the place. We have an uptrend, higher highs and higher lows. We try to push and we fail. We can't push higher, and we start a downtrend. So a lower low, characteristic of a downtrend. Let's see if there are any more patterns on this chart. I haven't looked at this chart beforehand with a nice range there. Okay, we have a double top here. It's a bit harder to see this one. It's not as clear, but price is uptrending. Here's our first push. We pull back, go for a second push, and we fail. We can't go any higher. See if we can find anything else. Let's try and find one more pattern, and then I'll move on to the next lesson, which is consolidation patterns. Sort of an inverted head and shoulders pattern here. It's quite hard to see this one. Some of them are clearer than others, but hopefully you can see that if I draw it out. Let's just go back a bit further. There's a big double bottom here. There's another head and shoulders pattern here. Once again, not the clearest because the head is so tight, but that's it. There's double top here. Price is uptrending, higher highs, higher lows, go for a push, pull back, push, and we fail and start moving lower. Okay, so hopefully this has all made sense. If not, please reread the lesson, please rewatch the video. We're nearly at the end of this Forex price action basics course. There's one more lesson left, lesson 9, consolidation patterns. I'll speak to you then.